Ladies and gentlemen, good day and welcome to the Praj Industries Limited Q4 and FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valuation Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. It's 12 o'clock, so good afternoon, everyone. My name is Anuj Sonpal from Valuation Advisors. We represent the investor relations of Praj Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Shishir Joshipura, CEO and Managing Director, and Mr. Sachin Raole, CFO and Director of Resources. Without any further delay, I request Mr. Shishir Joshipura to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good day, everyone. I welcome you to Praj Industries earnings call for Q4 and FY24. Trust all of you had the opportunity to go through our results for the quarter ended 31st March 2024. I would like to start today with two exciting developments in the quarter. First, Praj is ranked global number 1 in hottest top 50 companies in advanced bioeconomy by the US-based Biofuel Digest. This makes Praj the first Asian Indian company to bag this honor. From a global rank of 34 in 2018 to a global rank number 8 in 2019 and finally a global rank number 1 in 24, it's been a very eventful and exciting journey. Secondly, we are very, very proud to announce successful commissioning of commercial scale CBG plants based on press mud and rice straw, as also achieving benchmark results for yield. These plants deploy Praj's state-of-the-art proprietary PM Stab and BM Sol biosolutions to achieve reliable performance. With this, Praj now has proven commercial scale CBG projects operating on 3 key feedstocks, namely spent wash, press mud, and rice straw. This establishes Praj's Zengas technology as a definitive solution for complex agriculture feedstocks. Now coming to the business performance. Our performance for the quarter and whole year reflects the business development across different dimensions of our portfolio and our ability to create, deliver, and capture value to an increasing base of diverse customers. We are on a path to transform our business with increasing focus on emerging segments of CBG, SAF, and ETCA in near to mid-term future while expanding the share of international business in the overall pie. Our domestic bioenergy business saw the quarter continuing to see development of starch-based ethanol plants in the country with over 90% of our domestic order book coming from starch-based plants. The mandated realignment of sugarcane-based feedstocks on product mix slowed down order execution and finalization for ethanol projects based on sugary feedstocks. We are in discussion with several customers on converting their existing single feedstock plants to multi-feedstock. With favorable revised estimates on sugar production in the country, we are confident that the delayed project will soon get back on the track. On international front, as you all know, Brazil is the sugar and the ethanol capital of the world, and so far the ethanol production in the country has been from sugar feedstock, and of late it has started to produce ethanol from starchy feedstocks. Brazil is now moving rapidly on ethanol production based on starchy feedstock. I am happy to share that we have successfully handed over our first grain-based ethanol project in Brazil. We have already signed up for one more contract for grain to ethanol plant with DE8, a global renewable energy company in Brazil. The engineering activity for this plant will commence in this quarter, followed by construction activities in next quarter. I am happy to share that a French group has awarded us a contract to set up a 60 KLPD greenfield DNA plant in Ivory Coast, Africa. This is the second project from the same group. We are in the process of completing the first project that is being set up in Congo. The low-carbon ethanol opportunity in the United States is expected to get momentum post-notification of 45Z under IRA Act. We have initiated dialogue with several countries who have become part of Global Biofuel Alliance. On the services business that saw healthy 2x growth in FY24, we are eyeing significant growth in both domestic as well as international markets in FY25. Biogenic CO2 capture is increasingly gaining traction at the back of sequestration activities picking up, and we have started to provide solutions for capture of biogenic CO2. Our solution for enhancing sugar yield and quality is gaining traction in the Brazil market. On 2G front, IOCL plant recommissioning is underway. I am happy to share that plant has produced over 1 million liters of ethanol till date. Being first of its kind plant, there are unique situations that need resolutions across the ecosystem and the project. We are working very closely with IOCL team to resolve these and ramp up production in gradual manner. As for CBG, I have already shared the most important development. We are further working on establishing foolproof solutions for other feedstocks. The inquiry pipeline for CBG plants is developing in a healthy way, and we expect it to translate into firm business as we progress in the year. Our modularized solutions offering is finding strong traction in international market and has witnessed nearly 2x growth in order book over the previous year. Praj is chosen to build state-of-the-art modules for one of the largest blue hydrogen projects in Europe. We have also booked and executed engineering projects for modulation of ATJ projects. ATJ is the alcohol to jet pathway for SAF in the United States. We have commenced commercial production for our new GenX facility in Mangalore in February. All customer audits held for approval of this facility are successfully completed. Our PHS business has delivered strong growth over last year with healthy order book and has seen increasing traction for our high-capacity fermenter offerings. We completed 3 state-of-the-art blood plasma projects in this fiscal year, and with one major customer achieving 100% capacity for the plant plasma products. Zero liquid discharge, our motorized solutions are finding increasing acceptance from our customers. We are leveraging our core competence in industrial biotechnology and microbiology to develop specialized microbes for processing difficult to treat industrial effluents. The brewery and beverages business inquiry is now building up on the back of normalcy in the market demand. We are expecting capex investment in the coming financial year. Overall, the business outlook continues to be positive for our business. With this, I will now hand over to Sachin for his comments on the financial performance.
Thank you, Shishir. The consolidated income from operations stood at 10,185 million in quarter 4 of 24 as compared to 10,039 million in quarter 4 of the last year. PBT for the quarter stood at 1,230 million as compared to 1,128 million in the corresponding period last year. Profit after tax at 91.96 crores as compared to 88 crores of last year's quarter 4. For the full year ended March 31, 2024, income from operations stood at 34,662 million as against 35,280 million. PBT stood at 3,774 million in FY24 as against 3,187 million. PAT for FY24 came in at 2,833 million as against 2,398 million in FY23. Export revenues accounted for 20% for FY24. Of the total revenue, 74% is from bioenergy, 18% is from engineering, and 8% is from PHS business. The order intake during the quarter was 9,240 million, with 61% from domestic market. Of the total order intake, 65% came from bioenergy, 30% from engineering, and balance 5% from PHS business. The order backlog as of March 2024 is at 38,550 million, comprising 71% of domestic order, with 76% from bioenergy, 19% from engineering, and balance 5% from PHS business. Cash in hand as of March 31st of 24 is 700 million. The Board of Directors proposed the final dividend of rupees 3 per equity share at the rate of 300% of the face value of rupees 2 per equity share. final dividend, 300% at the rate of rupees 6 per share of face value of rupees 2 per equity share for the financial year ended 31st March 2024, which is subject to the approval of shareholders at the forthcoming annual general meeting. With this, I will conclude my remarks. Thank you all for joining. We would now be happy to discuss any questions, comments, or suggestions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities Limited. Please go ahead.
Congratulations, sir. Thanks for the opportunity. Congratulations on a very good quarter and a good fiscal. But my first question is on the order inflow. While we have done excellently on the revenue and margin front,
Mohit, we are not able to hear you very clearly.
Can you hear me now, sir? Is it better now?
Yeah, it's sort of, up and down voice
Okay,
level.
Let me be slightly loud, sir. Is it better now?
Yes.
Yes, sir. So my first question is on the order inflow. So you've done very well on the revenue and margin front, but the order inflow has been subdued, especially if you look at last couple of, especially H2. We haven't seen the bump up from ethanol or any other project. How do you think about the order inflow for FY25?
So thank you, Mohit. As you have pointed out and correctly surmised, the government's notification around alternate use of feedstocks, which, as you are aware, that there was a realignment required for the feedstocks from on the sugary side especially, where the notification came which said that syrup and molasses P cannot be used for production of ethanol. And that meant that there was a clear halt of sorts side as well as on the order booking side from this particular sector. And this is a very important part of our overall customer segmentation. So from that perspective, that was one. Two, as you have seen, that we have also built different business lines over the period of time, because EBP20 is a definite positive wind in our sales, but that has a definitive benchmark, and we need to then see how do we move forward from there. So therefore, a lot of effort has gone into creating alternative business avenues. And as you also saw, the starchy-based feedstock has started to pick up in a big way, with nearly 90% of order book coming from starchy feedstock. We have also seen CBG build very positively in the last half of the year. We are seeing ETCA opportunity building in a very positive and constructive way, as I mentioned in my opening remarks as well. So these are the vectors which are now also started to contribute in a very, very positive way. And that is why, although the sugary part of the business came to a virtual halt, it still did not impact the overall order book, and we were still able to meet nearly the same numbers in last two quarters of the year.
If I understood it correctly, sir, you think FY25 to be far better compared to FY24. Is it right to say, sir?
Sorry, Mohit, we can't hear you.
Because how do you think about FY25? I understood, sir, your issue with the order inflow for FY24. How do you think about FY25 order inflow?
Exactly. So, as I said, there is strong traction on CBG. There is strong traction on modularization. We also expect that at the back of a strong sugar season that the country has witnessed, we will see restoration of feedstock permission for using sugary feedstock for ethanol production. So we see that the canvas will start to change. It's already beginning to change in a couple of businesses and in the sugary feedstock side as well as we move forward through the year. So that will augur positively for our business as we move through the year.
My second question is on the execution in the current CBG order book. How is the traction? And also the related question is that we are hearing a number of CBG tenders are out from larger industrial players. Do you expect a number of...
So right now, if you really look at it, there are two or three vectors I was mentioning to you. CBG in India, ETCA on the international business, especially I mentioned about the blue hydrogen project, and that's just an indicator. We have talked about Brazil as a very important market for us, where we clearly begin to see build-up of a very good traction. The LCE opportunity in the United States. So we are beginning to see what we have been talking about as an opportunity to be developed, coming now, potential getting translated to order book. We believe that this will continue to be so as we go through the year.
Thank you, sir. Thank you for answering my question, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shailesh Lakhani from Centrum Broking. Please go ahead.
Good afternoon, everyone. Congratulations, sir, for a good performance given the challenging environment, and thanks for the opportunity. Sir, I had a few questions. First, on the engineering side, so when I see the order inflow for FY24, we have doubled. But on the revenue booking front, it has been tepid. So can you give some color what is happening over there?
So all I can say is that there is a cycle that we need to go through, the order execution cycle. So what you see now getting displayed as order book will obviously start translating itself to revenue as we go through the year, right?
Okay. So just to put it other way around, in my modeling, I'm getting a huge bump up in FY24 for engineering division, say more than a 50-60%, given the tenure of the order book. So is it a fair assumption, sir?
Sorry, Shailesh, can you please repeat your question? There was a disturbance.
Yeah. So I am saying, so just to put it the other way around, given the order book traction what we have seen in FY24, engineering division is expected to do a very good performance in FY25, say more than 50-60% in terms of revenue booking. Is it a fair assumption, sir?
Yes, fair assumption.
Okay.
Thanks a lot. Coming from ETCA.
That's right. You'll see a major change happening on the order booking because our new facility, as Shishir was mentioning, is already approved by the customers. We'll first see build-up of OB happening in that engineering segment in the next 2 quarters, and then the revenue will start flowing in because the facility is now up and running.
Yeah. Only thing is that given the way the order books will move, so as Sachin mentioned, it will be an order book that will get built up over the next 6 months, and then the execution cycle will take it.
Okay. Fair enough. Sir, another point is on gross margins. We have done exceedingly well in FY24 on gross margins term. So, and coupled with that, this is, I think, after nearly 5 years, we are having an order backlog where nearly 30% is going to come from international market. So, how do we see the gross margins shaping in FY25 and 26?
It's 2-3 things. One, the domestic and international ratio, what we always said that is going to change over a period of time, which has already started showing first to some extent in the revenue going forward in the order book. That is definitely going to help us on building up our margin. The other elements which actually created some kind of issue, mainly on the commodity prices in the last couple of years, has also smoothened. So we believe that that is also going to help us on the gross margin going forward. Our first target was to achieve the two-digit kind of a margin on the EBITDA side, on the build-up of the higher gross margin, which has already started showing the results since last 2 quarters. We think that this momentum is going to continue. With what that number is going to be, unfortunately, I will not be able to give that kind of a number as a guidance. But yes, our efforts on building up on the improvement on gross margin on the EBITDA is anyway going to continue.
That's very helpful. Sir, if I can squeeze one more question. So I wanted to understand on the order inflow mix going ahead. There has been a drop in the bioenergy space, right? And for obvious reasons beyond our control. So how do we see shaping, say, in FY25, 26 on order inflow mix?
No, so bioenergy, when you say bioenergy, then we will have to see it from a different perspective because there is the molecule is changing, number one. Number two, the segments may change. in terms of geographically, whether it's India or outside India. I mentioned Brazil, I mentioned United States. We also mentioned 2 quick orders from African region, what's going to happen at the back of GBA. So maybe the construction of the bioenergy order book will change because of change in molecules, because of change in geography, change in application. But overall, we expect this to grow. We are not expecting it to stay stable, status quo or shrink, not at all. We are actually expecting it to grow. Also, we expect the engineering order business to grow, as we already answered to you. So we expect both our major business segments to actually continue to grow from where they are, maybe with a different at elemental level, different construction, but overall the book will continue to grow.
And Shailesh, just to add, we had mentioned that our 2030 target is 3 times of revenue. And in that build-up of revenue, all the businesses are going to equally contribute. So even in the bioenergy space, if you look at, maybe within bioenergy, we will see some kind of shifts happening between, let's say, CBG and SF and biofuel. But all these things are going to contribute in the overall picture of our 3 times of revenue going forward.
That's really helpful. Thanks a lot, sir, and best of luck, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Manish Goyal from ThinkWise Wealth Managers LLP. Please go ahead.
Yeah, thank you so much, sir. Please bear with me. I have few questions. First, on the services business, if you can probably provide more insights on different kind of services we offer and what are the revenue potentials. Probably one is performance enhancers, which is probably like a consumable, and then you had earlier spoke about opportunities in US for low carbon intensity refurbishments of plants. So that is first question on services, and how much does it currently contributes in terms of overall revenue? That was one. And second, sir, if you can also give us a perspective, like you just mentioned on gross margins. So one is definitely you mentioned international revenue share improving, but any other change in revenue mix with, say, engineering share improving or high purity improving? So does that also supports your gross margins improvement? That was second question. Third question is on any update on US front in terms of Inflation Reduction Act incentives under IRS, if you can provide that. Maybe if you allow, I'll probably have a couple of more later on. Thank you.
I think all the questions you have asked in one bit. So let's first try to answer those questions and then we will see.
Thank you, sir.
Yeah. So on the IRA front, the 45Z notification is still awaited, so we do not have that. But as I mentioned to you, we are already, some of the customers are already beginning to move in the direction, because the fact remains that if SAF has to come through on ATJ pathway, and that is the most considered to be the most viable pathway right now outside HEFA, the low carbon ethanol has to become a reality, and we expect that will happen. So the first project is already under construction now by us. So we will see how that develops, and we are expecting 45G to be clarified soon. In terms of margin that you said that, what's going to be the order mix or mix of businesses, let me tell you that we are very clear in our strategy in what we see in front of us, also future unfolding. Each and every one of our businesses will grow from here onwards. So we're not expecting any business to shrink. There may be slightly different construction at the elemental level, but other than that, we do not expect any other change. And all of these are favorable, if I can use that word, are on the margin side of the story. So that's what we expect will happen as we go forward. Each and every business of ours will grow. Some of the new stuff we already talked about, CBG, ETCA, and in time to come, SAF will also start to grow very, very constructively as we move forward through the year.
Sure, sir. And so, we have seen a very strong traction in international order inflows in the current year, and that is across the segments. So, how is the pipeline, and do we see this momentum continuing going forward? And sir, I missed on my first question on the services business. Thank you.
Yeah. So you asking me question, then we don't use that.
Okay, so sorry. So maybe you can answer on services. I'll come back on that.
On the services side, so the low carbon ethanol opportunity in the United States that you mentioned is not a service offering. It's a full-fledged technology offering from our end. So that's not part of the services, but the performance enhancer I mentioned about a new traction we are finding in one of the products that we introduced on the sugar side of the industry, not ethanol. This actually helps into sugar qualities and color, etc. So that's finding very good traction. So, and services, then other stuff, through digitalization, what we offer to our customers for managing their plants remotely, for part services, O&M services. So these are all different package of services that we offer to our customers. They obviously need set of enzymes and performance enhancers and yeast, etc. So that gets sort of bundled together and moves forward. So services is a different construction of business that moves forward. Okay. Anything else that I left out?
No. So how much, sir? Like what could be the current contribution of services roughly, and how do you see it growing, sir?
5%. So the contribution from services business currently is in the range of 4 to 5%, and we expect that pie to go up going forward because on a continuous basis we are increasing our offering under services umbrella. Just to give an example, today when the CBG plants are coming up now, for the maintenance or for the maintaining the quality of the feedstock, there is a biological solution which we are providing under our services umbrella. So that is supposedly to also contribute in a big way. We have introduced providing our solutions in the Brazilian market in a big way now. It has also started picking up now. So the services pie is supposedly to go up going forward.
There's another important element to the service business that I mentioned is about capture of biogenic CO2. And that's going to find, that's increasingly finding a big traction because CO2 capture is becoming a significant activity for several of our customers and organizations across the world. And that's where we are beginning to offer our services and solutions for capturing of the CO2. As it is generated. So that will become, that's also part of our services portfolio.
And the best part is our captive customer base is also increasing.
Sure.
It is also going to contribute in a big way
and
for
all
our services.
All fermentation processes will create biogenic CO2. So that becomes almost a captive customer for us.
Right, sir. I'll just squeeze in one more question on high purity, sir. Again, this segment has seen a very strong order inflow as well as execution front. So are we also started getting inquiries from semiconductor and electronic plants which are being set up in India, and can it be a large opportunity for us?
So if the semiconductor chip manufacturing needs water which is of the same level of quality and purity that is required for pharma application, and so from that perspective, from a capability perspective, we already have the capability. As and when the projects are announced, and these are large outlay projects, obviously this will take some time to get off the ground, but as and when they come up, we'll surely be hearing about it and we'll speak to you. As of today, we do not see any projects actually going to a stage of ordering out equipment and discussing and all that. So I think we are still a little away from that.
Okay. I'll come back in the queue. Thank you so much for all that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Sagar Kapadia from Prabhudas Lilladher. Please go ahead.
First of all, congratulations to the Praj team that even in such a tough time, you have come out with an excellent set of numbers as well as the excellent order intake.
Thank you, Sagar. Go ahead, your voice is cracking in between. Huh?
Okay, I'll speak a little bit louder. Sir, I just wanted to split. In the bioenergy, you have said there is an order intake in the fourth quarter worth around 600 crores. So what is the split between the CBG and the ethanol orders?
So, Sagar, we have not yet started splitting our segments into what I can say mini segments right now. But yes, there is a order book built up happening on the CBG side and on the ethanol starchy feedstock, which Shishir had mentioned earlier. But we have not started giving this further.
Last quarter, you had given that information. You had received certain, 4 orders from CBG worth 400 or 300 crore. You had given that information in the conference call.
We had mentioned because that was the beginning of CBG order picking up, but we have not yet started giving the split of all the verticals.
Okay, so you are still not giving that split between the six.
That's right.
But can you give me a split broadly, like out of this 600 crore, how much is for the exports?
That's possible. Just give me a minute. If you are having a second question, you can put that second question and I will give you a split of 600.
No, I don't have any other question. This is the one only. Okay, well, how much is contributed by that?
Okay, so out of that, almost 150 crores will be exports and 450 crores will be domestic.
Okay, sir. Thank you.
Thank you.
Yeah.
Thank you. The next question is from the line of Nihal Shah from Prudent Broking. Please go ahead.
Hello, am I audible?
Hello.
Am I audible?
Hello. Hello.
Hello. Hello.
We lost him.
Hello.
Yes, you are audible. Please go ahead.
Yes. Thank you for the opportunity. So my question was on the engineering front, as we are seeing a lot of traction there in the terms of order book, and in this quarter our revenues also 20% of them came from the engineering segment. So how do we see our margins going ahead?
Sir, we have lost the management line connection. Please stay connected while we reconnect them. Thank you.
Okay.
Hello. Ladies and gentlemen, thank you for patiently holding. We have the management line back on call. Nihal, please continue with your question.
Yeah, so congratulations for the great set of numbers. So my question was on the line of engineering segment, as we are seeing good traction coming from there. About 20% of our revenues also came from that segment, and order book also looks strong. So going ahead, how do we see our margins improving from around 11% to 13-15% in the next 2 to 3 years?
Sorry, I will not be able to exactly give you how the percentages are going to move. As I mentioned in my earlier comment that our endeavor is first endeavor was to get into double-digit margin and then build on that margin. We have to keep in mind a couple of things, because we are talking about expanding the business offering in the form of, let's say, CBG is supposedly to catch up now, services business is supposed to go up, SS businesses start kicking in. But at the same time, there is a lot which is happening on the developmental side also, for preparing ourselves for the next wave of growth. So we are investing in R&D in a big way. Our PLA plant is supposedly to start its operation from this year. The second quarter, we will start the operation of our PLA. We will get into more R&D related activity. For CBG, we are working on multiple feedstock testing in our demo plant. So there is a lot which is happening on the developmental side also. And whatever happens in our research side, it gets actually debited to P&L. So we don't capitalize our research expenses. So depending on how these activities are going to get built up, the margins are supposedly to move. But as I said, our efforts are to build upon what already has been achieved in the margin side.
Okay, and another question was on the front of the sustainable aviation fuel. So are we seeing orders starting to come up from that segment? Because I guess there was a 1% target that the government had set till 2025. So how is that segment moving?
So, Nihal, SAF is what we did was we demonstrated last year that it's possible to make SAF in India on local feedstock. That was the proof. There is no legislation in place as yet. The only agreement that is in place globally comes into being. It makes mandatory for airlines to blend 1% starting 1st of January 2027. So these are still early days for SAF. But as we go through the year, maybe towards the end of the year, we'll start to see some announcements around SAF capacities being set up, etc. So we'll see how that develops in terms of what mandates come, what's the new policy that comes in for the domestic aircraft. The international part of the business, as I said, is already in the 1st January 27. Already done.
Okay. Okay, I'm sorry, just follow up on the previous question. Like, is the execution cycle on the engineering front slower than that in the bioenergy front, or it takes around the same time?
No, it's actually in some cases it is even longer than the bioenergy side, depending on the complexity of the project.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vikram Vilas Suryavanshi from Phillip Capital India Private Limited. Please go ahead.
Yeah. Good afternoon, sir, and good numbers given the challenging environment. Initially, I just missed few comments, so pardon me in case I'm repeating this question. In case of a bioplastic or a demo plant will be ready, so how is there any inquiry pipeline or how we plan to monetize it? That is my first question. And second, on Brazil opportunity, you highlighted to some extent already, but would it be possible to give what will be the scope of our services there and any business development strategy over Brazil? And I guess it will be mostly on maize side. So if you can answer these two questions, that's it.
So let me take the second question first, Vikram. Thank you. So in Brazil, as we have known, Brazil is obviously known for its sugar-based ethanol production, but as the country is moving to enhance the use of ethanol, they are also finding very similar challenges to what we did, that sugarcane is not present in all the part of the country, so they need to transport ethanol long distance, which is not a good thing, not a positive thing from an environmental perspective, etc. So they have also started to look for alternative feedstock, and starchy feedstock is a natural candidate in line for that. That's number one. So they are beginning to look at alternative feedstocks in terms of what kind of starchy feedstocks in different parts of Brazil that can be put to use. We commissioned our first project based on corn. The second project that I mentioned to you about is based on wheat. So different feedstocks in different part of the country that will be put to use. And we from our inquiry pipeline, from the dialogues that we are having with customers, we clearly see this to be the new growth area as far as Brazil is concerned, in terms of capacity that will come up as we traverse through the year. There are already significant amount of activity increase in that space as far as Brazil is concerned. On the PLA, we obviously need to first, it is a demonstration plant that we are now building, and it will start commissioning in this quarter. And once that is commissioned and the process is established, obviously we'll have to invite the interested customers to the plant for them to witness the process and its efficacy, and then only we'll be able to build it. So we are not building any PLA-based revenue or book in this year's